Welcome to the B.F. Anderson Technical Report for March the 10th. You know, when I saw this cartoon, it really kind of got my attention. It reminded me of an old Wall Street expression, which is, fools rush in, and on Wall Street, that's a disaster. Then another expression I've heard over the years is, markets are designed to fool most of the people most of the time. So the word designed, it means that markets, if they're not fooling most of the people, then they're not markets. So it's just an interesting cartoon. Anyway, I'm adding a new indicator to our list of sentiment readings. This is the Naaim exposure index. This is showing the exposure to equities by U.S. money managers, active managers. So you can see here that we're really getting down into an area where basically 70% is they're only 30% exposed. So this is very meaningful because it means that there's a lot of cash on the sidelines. Saw this picture as well. Boy, this was an interesting picture where the well's going off behind somebody's house. It's really amazing. But the thing about the oil industry that I know is that, and you may want to pause your video player to see this particular graph, but there's something called demand destruction, which is where when the price of the commodity gets too high, it starts to destroy the demand. So as you can see here, as the graph points out, that once you start getting to 5, 6, 7% of world GDP going to pay for oil, you get into demand destruction, which can cause either a stagnant economy or a recession. So, the thing I know about oil is that the price can go up a lot, but it can also drop very rapidly. So just be aware of that. The market continues to struggle. This is the Nasdaq, as we know. We continue to see a downtrend here, actually making somewhat of a fresh closing low. Volume has been kind of high to the sell side. The sellers are in control of this market. What we want to see is a battle between the buyers and the sellers, and right now the sellers are winning. So as you can see here, the 35-week moving average has turned down. We're still below it, actually looking like a downtrend. Now we're probably going to get a rally in here, but just be aware of the fact that, the beauty of trend following is that you'll never experience a full bear market and you'll never miss a bull market. But the negative is you're not going to get out at the exact top and you're not going to get in at the exact bottom. But right now the trend is down today, so we have to deal with what's happening today. This is the mid caps, basically the same, continues in a downtrend. New York Composite, all the stocks on the New York Stock Exchange clearly in a downtrend. Then we have the small caps. Small caps are acting a little bit like they're trying to put in a base here. The small caps are actually one of the stronger indexes right now, which can be a good sign. S&P 500, again, same thing. We've got the downtrend. In other words, we're making lower lows and lower highs. That is a downtrend. Now here we have the weekly, which again you can see the 35-week moving over. This is on the S&P, and we're continuing to break down. This is troubling. This is the yield curve, comparing the 2-year Treasury to the 10-year Treasury. This indicator has pretty much predicted every recession going back 100 years, and it tends to be early. So basically, you can see here the last time we inverted was prior to the pandemic, which ended up in a very quick recession. Anyway, you can see here it's really starting to come down. The yield curve is looking troubling. The aggression index, a very sharp decline here, very similar to the bear market of 2000. The aggression index, when I went back and back tested it, 2000 was really kind of the area that this looked like. But anyway, aggression index says, should we be aggressive here? Should we be speculating here? And the answer is no, you should not. You should wait for this thing to settle down and get back. In other words, fools rush in, and that's a disaster. Now, you can see here with interest rates, we've pulled back on the 3 economic indicators we look at. We pulled back on interest rates, getting a little bit of a bounce. You can see the price of oil basically smoke up a chimney going through the roof. And at the same time with interest rates, the financials are pulling back as well. Now on new lows, we're getting still too many new lows. Again, this calls for caution. However, everybody is cautious because the sentiment readings are, we're real deep in fear, which is probably a good time to be looking around. This is where bottoms are made. Now, this is that exposure index that I explained that I was going to be adding. So again, this is where bottoms are made when people are fearful. Tops are made when everybody's happy and having a good time. So that's just something to understand. Put-call ratio continues to vacillate. We're not seeing a dramatic purchasing of puts like we saw back in the pandemic. Starting to kind of cool down. So the thing I like about the exposure index and this particular index is that this is what people are really doing with their money. Now, this is our trend strength, continues to be very weak. You can see here we actually broke to a new low. This is on the Nasdaq. You can see that all the moving averages are starting to roll over, starting to get wound up with each other. That's not a positive pattern. Now, here's the trend strength, again, 0 on the S&P 500. We've got to see this improve. Volatility index, you can see here with the VIX, which is measuring volatility, it's definitely in an uptrend. So volatility has been increasing. Now, back here in the pandemic, as you can see, we got to some really extreme readings. We're not getting those kind of extreme readings yet, but it continues to stay in an uptrend. Top 5, again, you can see a lot of energy names here. Here's Patton. UTI Energy above the 10-day moving average in a very strong uptrend. Energy is the only area other than things like fertilizer and commodities that is showing this kind of strength. Occidental Petroleum, in fact, Warren Buffett announced the other day that he's taken a position in Occidental. Here we have CF Industries, which has got a plant down in Donaldsonville. Big nitrogen producer, big fertilizer producer. You can see uptrend. Commodities. Devon Energy, again, above the 10-day moving average, continues to stay strong. This is Marathon Oil, a refiner. It's doing well as well. So as you can see, the energy stocks are dominating the scene. However, I would be careful with this group. It can be very dicey. Let me know if you have any questions. Thank you very much.